The big day for XLM and XRP is here, as well as the entire crypto and stock market are going to be waiting until 8:30 a.m. Eastern time for CPI data to release. This video is going to give you all the information you need to be ready for the announcement and what to expect depending on what the data tells us. What's up, girlfriend? I'll tell you what's up. Me thanking all of you for the massive amounts of support for this channel that's pouring in. Heatmap says XLM is sitting at 7.9, just under 8 cents. We're gonna have to keep an eye on that, especially with the data tomorrow. I was hoping that XLM would actually be above 8 cents before the data, but hey, we're right there. XRP seeing a really healthy rally, up 6.5% last 24 hours, just under 37 cents. Broader look across the market sees the two big boys here basically going sideways. Why? Because traders need to see the data. All right, let's get into how important this is. You see this move right here? This was the move right here from the last chunk of data, and you could see the market reacted quite heavily with XLM dropping well below 8 cents down into the mid 7s. XRP did the exact same thing, and you could see both here have been rallying as of the last several days. And let's start going over expectations and what we can expect for the market to do reaction-wise. And if you stay to the end, I've got some bonus information for you. It has to do with China reopening the market, possibly messing up what Jerome Powell and the Fed is doing. Stick around for that if you want to catch that out. But here is the trend for the last year. You can see we peaked in June with 9.1. A previous month, November 2022 data came in at 7.1. Expectations are at 6.5. If CPI data comes above 6.5, oh man, Mark, we're going to retrace everything that we've gained here over the last few days. Now, if we're at 6.5 or lower, the markets will continue to rally as Jerome Powell and the Fed are then going to be saying, hey, wait a minute, maybe we don't need to overcorrect as much and maybe we can pump the brakes even more. One thing we all have to keep in mind, though, is what the target rate is and what Jerome Powell said at the last meeting. Now, at the last meeting, that's when the Fed did their projections. Jerome Powell said, hey, look, I know we're dropping down by quite a bit. We had a 0.6 delta right here. We had a 0.5 delta right here. But keep this in mind. Their target is 2.0. So if the data even comes in at 6.5, we're 4.5 points above where we need to be. And if we can expect a 0.5, 0.6 delta at, each time, that's 9 months away with aggressive rate hikes and CPI data following. Guys, we're still a long ways away. So we have to be very cautiously optimistic on what's going on with the market. Now, this movement right here with XLM and this movement right here with XRP has to do with the Chinese market opening, okay? This is big, and I want to talk to everyone specifically about this because this is going to be an even bigger factor for us to pay attention to. All right, so we're all good on the expectations for tomorrow, and we're going to be live streaming. Look for this picture right here with Jerome Powell with the numbers on it. That's the live stream. We're going to be watching the markets before the data is released to see if there's any preemptive action as soon as the data is released, and then we're going to look for the market reaction afterwards. Now, let's start talking about the China thing because this is something really big we have to talk about, and this is why I'm a little more than cautiously optimistic. Okay. Jerome Powell and the Fed with CPI data and all this. This is how all this works, okay? The Fed can only raise and lower rates, right? I mean, what else can they really do? They've got this massive hammer to strike the economy with. And what they try to do is this. You've got supply and demand, okay? And what happens is we know supply chains out there aren't getting fixed ever since the Rona. So what does Jerome Powell and the Fed have to do? They have to keep jacking up rates to lower consumer demand, right? Think about housing. Why is everyone thinking housing is going to go down here soon? Well, because if we keep raising interest rates, houses are going to be super expensive. It's going to drive down demand, okay? Which means then hopefully the prices of homes start matching that, right? That whole supply and demand metric. Same thing happens too with consumer spending. For over the last couple of years, credit card rates, base rates have been very, very low, meaning people can, spend and they're not going to get taxed as bad, even though credit card rates are actually really, really bad. That being said, though, if Fed keeps jacking up rates, that means credit cards are going to be more expensive. That means hopefully that'll curb consumer spending on the way down. Again, that supply and demand metric. Now, tying into China, this is where the kind of big fear kind of comes in. And a lot of us out there are thinking, whoa, good news that Chinese market opened, but bad news. Why? Because of all the printed fiat. Remember, governments across the globe printed fiat during the Rona to keep their economies going. Now that China's economy is open, That's a flooding of fiat into the global market. I heard a tourism stat that said they could expect over $1 billion of Chinese tourism money to flow into the economy in the first couple weeks. Isn't that crazy? That's pent up. Okay, so now as Jerome Powell and the Fed are trying to squash demand, right, to help bring down prices in that supply and demand metric, if all of a sudden China's economy opening up increases the demand, right, those people leaving the country, traveling, purchasing more, ordering goods, kind of life getting back to normal, that could almost undo the actions from the Fed. And that's why some of us are looking at this. I'm one of them, actually. It's saying, hey, you might get actual inflation data, CPI data start coming down here in the next couple months, but be very, very cautious that if China's, increasing demand by pumping more fiat into the economy, starts ramping up inflation numbers. Now, on the flip side, there's economists out there that are saying, well, wait a minute, though. China's also opening up their manufacturing war, which might ease some of the supply chain restrictions that we've seen over the last couple of years. So the dynamic between supply and demand is a very, very tight one right now, and we all have to pay attention to it. But let's not look too far into the future yet with China, because remember, they could always go back into lockdown like that. So let's keep the focus on CPI data. Tomorrow I will be there to guide you. And remember, 6.5 is the expectation. Above 6.5, markets go red. We go below 6.5, the rally most likely will continue. And I wanted to share this tear sheet with you really quick to show you how big of an impact CPI data has. Stocks will plunge 3% on Thursday if December inflation comes in higher than expected, JP Morgan says. That's the stock market. And we know the crypto market has way more volatility built into it than the stock market, which means if we come in higher than expected, you could see a double-digit retracement, 10% or more in the crypto market, meaning guess what? Jerome Powell and the Fed would have to jack rates up even higher, keep their foot on the gas pedal, trying to crush the demand side of the equation, because no one in the world is fixing the supply side of the equation. Hopefully I did a good job explaining the importance of CPI data and how this is the single biggest data point that the entire globe is looking after right now when it comes to markets. And some of you out there are going to be like, well, wait a minute, Klaus, CPI data, that's reflective of the US economy. What about the rest of the world? And you know what? You're right. The thing is, though, central banks across the globe take cues from the Fed. So if the Fed is like, hey, inflation is still not under control, we need to jack rates up, central banks across the globe are going to do the same thing. England, Canada, tons of other countries out there where viewers like yourselves are from are all dealing with the same problems of high inflation with supply chain issues from the Rona, but demand still being way high. Why? Because of all the printed and pumped fiat into economies across the globe. Thank you for watching this informative video leading up to CPI data. Fingers crossed, let's hope we get something 6.5 or less. If it's 6.1, I'm taking a few days off and celebrating because I'd love to just relax on a few more days of green candlesticks. I'm gonna leave you with this video right here that YouTube specifically picked just for you. Thank you again for all the various levels of support for the channel. I greatly appreciate it. Until more news breaks, you cool cats have a great rest of your day.